Hello friends, Marv Eisen here from Timeless Dollar Trading Academy. Several weeks ago, I made a video that proved quite popular. The subject was a conservative method of trading that offers high degree of profitability with relatively little risk. And I want to repeat it today. Now, it's very simple. Wait for the first half hour to hour of trading, watch for the intraday high or low up till that point, and see which one gets taken out. And the one that gets taken out is the direction of your trade. And I want to illustrate it in today's video. Here's the market, the S&P E-mini market, on Friday, October 11th. Market opened right down here at 58.24. Jumped up and down, basically closed the gap. There was a very small gap on that day. But where did the market go? And that's the most important question every trader wants to know. Where is the market going to go? So the suggestion is to wait till the first half hour to an hour after the open and see which high or low is taken out. So we see right here at 10 o'clock, the high was right about here at 58.42. And shortly thereafter, it was taken out. So what's the direction of trading? The direction that gets taken out. This was the low. It wasn't taken out. It wasn't even tested. This was the high, and it was taken out. And where did the market go? The market went further in that direction. And where is it going to go? And that's the job that we use the Taylor calculator for. And so we take the calculator, transpose it to the intraday high or low, clone it, right to the intraday low, which was right over here, basically at the open, and the market was going to top out at the calculated level of 58.60, which is exactly where the market went. So if you use this conservative technique to wait for a half an hour to an hour, get on in the direction that the market takes out the high or the low, and trade up until the Taylor calculated resistance or support, you'll have yourself a fairly safe trade, high probability with relatively low risk. Now let's move forward to another day, the next day, Monday, October 14th. Market opened right over here. The trading zone, the calculated trading zone, was down here, support at 58.36 and resistance at 58.79. But nevertheless, we have to go where the market is going. So where was the low? The low was right over here at 58.77, and at 10 o'clock, here was the high, all right? And at 10:30 or 10:40, that high at 10 o'clock was taken out over here. So it was tested and taken out, but then it moved down, but right over here, it did not take out the low. So where do we trade? We trade to where the market is going to take out the high, which was at this point. And we could have gotten on over here, and where was the market going to go? Again, we take the calculator, the Taylor trading zone, and we clone it to the intraday, in this case, the intraday low. And this is where the market bottomed out, right over here at 58.74. Where was the market going to go? Where do we get off? We get off right around over here. And just prior to the close, we see the market actually did hit the calculated resistance at 59.70. Okay. Next day, on Tuesday, October 15th, market opened just about where it closed on Monday and made a high just about at the open at 59.13. And by 10 o'clock, here was the low at 59.04. And shortly after making that low, it took out the low. So where is the market going to go, and what direction do we trade? We trade in the direction that it takes out the high or the low. In this case, it took out the low, and in a momentum move, the market shot down. Where was it going to trade? Where were we going to get off? Assuming we waited until 10 or a little after 10, we saw the market was taking out that low, and we take our trading zone again. We take it and we clone it to the intraday, in this case, the high. We move it down to the high right over here, And where do we get off? We get off right over here. Sure, the market went down lower, but nobody knows where the market is going to go. This is trading by the numbers with a conservative point of view. So, as I say, trading is simple. It's not easy, but there are methods of trading that put the odds in your favor. Marv Eisen for Timeless Dollar Trading Academy. And if you are interested in the Taylor calculator, probably the most worthwhile tool you'll ever have in trading, it's right over here. It looks like this, and it's so simple to use. There's a lot of numbers on it, but basically all you do is enter the date in the left column, and in the 4 columns next to that, you enter the open, high, low, and close for the day. The rest of the numbers fill in automatically, and the columns in yellow are the calculated resistance and support. And you put those numbers on your chart, as I have, okay? As I have, and you're all set. You know where the market is going to go based on the Taylor calculated trading zone. You know when to get off, when to get on rather, and in what direction based on using patience and observing the intraday high or low in the early part of the day. Thanks so much for watching. Trade safely and remember, use lots of patience, and I'll see you in my next video.